Good afternoon, Outliers. How y'all doing today? Happy Monday. I hope your day is going super well. I hope that the weekend was super kind to you. And I am super glad that you are back here. Hey, Dave, good to see you. Tug is here. Michael's here. Other Michael's here. Howdy, Michael. Glad you made it. I found a couple new channels this weekend on YouTube that are awesome. And I wanted to show at least part of one of the videos today. This is called Kamikaze Cash, and they talk about some of they call it dankish trades on Wall Street bets, but basically they go through Wall Street bets with these like absolutely degenerates, and they follow their story from beginning to end. And oh my gosh, they're so entertaining. So I want to share a couple of these. This might be on the regular, something I pull up, but each story is only a couple minutes long, but totally worth the time to listen to. Sebastian, good to see you. Jean-Louis. Hey, before we jump into that, Mahesh is really stoked. Mahesh is actually working on an OVTLYR 3.0 version. Signals, as far as I understand, aren't going to be changing, but it's the user interface is going to be changing a lot, upgrading hugely, more bigly. So I'm quite excited to see where that comes. He sent over a mock-up that I looked at the other day, and I'm excited about it. And you know what's great is the fact that we actually trade with this. It's not like we created it and dropped it out in the universe and it's like enjoy. No, we're actively trading with this. We're actively making money with this. And so we're always finding ways to improve upon it. So that's the way you can tell when somebody's really putting their money where their mouth is, if you want to think of it for real. Hey, Goran. Hey, Jean-Louis. I don't know if I said hi. I think I did. Either way, let's check out this video. It's super good.
Street bets trades that deserve to be remembered forever, which I admit is ironic because while cleaning up my folders, I found this entire dank trade script that I wrote up and then forgot to produce before I moved on to other projects. But luckily there's no such thing as a legendary Wall Street bets trade going stale. It's time to dust off these tomes and start etching these tales into the annals of Wall Street bets history so that these extraordinary trades are never forgotten. Boys and girls, it is my honor to bring you the dankest trades of Throwback Thursday. We're going to start things off with something we typically don't see on the internet, a woman. Named Toro Beb, this young woman appears to have done a significant amount of stress eating during the 2020 lockdowns, gaining weight uncontrollably fast. But she has since recovered by using an exotic method of weight loss called diet and exercise. So congratulations to Toro Beb on her strong low-back game. But this weight loss was only step one of her post-lockdown renewal plan. As a part-time social worker, baby Toro only made about $15,000 a year in take-home pay, leaving her largely impoverished. Further, with the inflation hitting hard, she needed monetary gains, lest her destitute condition only get worse. Luckily, through her career as a social worker, Toro Beb was exposed to information on cutting-edge medical testing for the development of new drugs. One in particular caught her attention. A company called Sealos Therapeutics, ticker SEEL, or SEAL, expected to complete a phase 2 clinical trial on a ketamine-based anti-suicide drug that is administered straight up the nose like liquid cocaine, or ketamine. This exciting drug candidate put Seal on the cusp of a major source of fresh revenue, trading at only $1. Dropping stacks into Seal shares was the obvious choice. No doubt, an effective anti-suicide medication would be in high demand, especially among young Gen Z and in Russia and Korea. In mid-September 2023, she slapped down about 16 months' salary on cheap shares, just before clinical trial results were due to be released. Surely, Seal would announce outstanding results, sending its stock soaring over the moon. On September 21st, Seal announced the exciting news. The drug worked wonderfully, with 0 patients dying during the trial, and better than expected results for at-risk patients. However, there were 2 problems. The first was that a side effect of this anti-suicide drug was twice the placebo rate of suicidal ideation, which is explicitly the opposite of this drug's intended effect. The second problem was that the company ran out of money to pay its clinical trial patients, leading to 73 out of 220 subjects quitting the test early. This prevented the study from reaching adequate sample size, invalidating the phase 2 trial, and also indicated the company was so broke that it couldn't even afford to run a clinical study. As a result of the botched trial, Seal stock dropped 75% overnight. Toro Beb's position and a year's salary was ganked.
I didn't realize I was muted. Sorry. Just a minute ago when I popped in, I said I didn't realize that it said on the disclosure, I have no idea what the charts mean. That was hilarious to me. Sorry, I was muted, so I didn't make any noise in the background. All of these stories are so interesting because there are some incredible huge winners and some unbelievable brutal losses. But at the end of the day, none of them understand what position sizing is. One of these videos, it said that their position sizing is they position size as Lambos or food stamps. So either they win and they're all driving Lambos, or they lose everything, and they're on food stamps. So yeah, I'm going to continue on with this. I'm really enjoying these channels now.
Her mental health was clearly impacted, as she was most recently seen writing poetry, a sure sign of internal struggle. But the fight for Seal was not over, and their next anti-Alzheimer's drug worked great on monkeys. However, this got them only as far as presenting a poster at some school science fair, after which point they had to do a 1-to-30 reverse stock split just to remain listed on exchanges. And then the stock cratered back down to $1 anyway. This one, we're gonna call an L. Hang in there, Beb. It's not like you lost a lot of money or anything. Now, let's check out the hottest tournament since Lobo Gym 2004. Legendary Wall.
Oh yeah, so there's 4 or 5 stories per video, and I think I'm going to make these as part of my rotation because I really enjoy listening to these. And they, if you listen, they teach great stories. The great stories are have a reason to get in, follow your plan, but then again, if you have a reason to get in and you followed your plan, get the hell out when you get your signal to get out, right? Most of these people are just round trips. It's the same thing over and over. If they find the stock, they have this reasoning, they happen to be right, they make tons and tons of money, and then they lose it all. And it's just that story on repeat. So yeah, but I got to tell you, these videos are so well produced. I really enjoy them. All right, let's go right into our market analysis for today. Welcome to the OVTLYR Trading Room. This is smart trading made simple, where we save time, make money, start winning with less risk together as a team. And for those of you who don't know me, I'm your rich Uncle Chris. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR that I call the golden ticket trading strategy. And in fact, one of the people that I went to Ox Ranch with, I ran into him over the weekend, and he has purchased, his name is Mike, like it seems like every other guy in our group here. His name is Mike. So Mike, if you're listening, glad you made it. But Mike's having a hard time figuring out the Discord and YouTubes. But I was telling him how well we've been doing this year. So hopefully Mike is jumping in and listening along with us. Either way, this is the golden ticket trading strategy. Now, how does OVTLYR work? It's a 4-step process. Number 1, OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. OVTLYR determines if those investors are acting irrationally fearful or greedy, and by how much. OVTLYR gives buy and sell signals when those irrational behaviors reach an extreme. And number 4, allowing you to get into the stock move before the OVTLYR move happens. Now, let's talk about today's member highlight. I didn't see a whole lot going on in the Discord. In fact, we may have a pretty dull member highlight. Michael, sweet name, just saying. Alex, good to see you. Yeah, looks like it's been quiet over the weekend. Where you guys at? Out enjoying life, I assume? Let's see. There was a couple of support forum requests here. And please continue doing that. That lets us know if there's an issue. We always assume everything's working correctly, but on occasion, you might click a button, you might click a link that is broken. It doesn't happen often, obviously, but if it is, we want to fix it right away. So this is definitely the best place to let us know where if you run into any issues, we want to be there to fix that right away, right? Of course, we want to take care of you as best as possible. So be sure to share your stories in the Discord and tell everybody you know about OVTLYR. That's the first rule of OVTLYR. You tell everyone about OVTLYR. And do me a favor, hit the like button to tell YouTube to tell everybody about it as well. And don't forget, it's free. So on the golden ticket trading strategy, we're going to let the market tell us which direction it's going with the SPY, 10 over the 20, price over the 50. And I haven't been paying too much attention over the last couple of days since I've been out of the market. But the SPY has a decent sell-off today, down 86 basis points. The Qs are down over 1% right now. Remember, the 10-period EMA, that's the blue line, that represents your short-term moving average. And if your short-term moving average is getting violated over and over, it may not be all that great. It may not be that great of a trend right now. Case in point, this is what a beautiful trend looks like. This is what a sideways trend looks like, right? That violation just happens over and over. But we do have the 10 over the 20, price over the 50 right now. So it's still a bullish trend. Now, if we go to market breadth, this is what got me out last week and why I'm still planning to be out right now. You can see the market breadth has crossed down. Now, what does the market breadth measure? The green line measures how many stocks are getting new buy signals on our bull list here. And we have 48 new names on the bear list, 48 new sell signals, yet only 11 new buy signals. So it's definitely not looking so bullish right now. Goran asks, what about the big outlier news you announced weeks ago? I mean, you announced the big news is coming. Goran, if I had the news to tell you, let me put it this way. We have two huge things in the process. Mahesh is still negotiating back and forth. The ink is not dry on the paper yet, but once it is, trust me, Goran, you'll never hear me not talk about it. You will never hear me not talk about it. It's that big of a deal. Basically, we're going to get Outlier into a hell of a lot more people's hands, and it's going to be awesome. It's going to genuinely be awesome for everybody involved. Brian says November 5th is the rollout time for the new. No, Brian. So Brian just told us that it has to be done by November 5th. That's our deadline. Good to know, Brian. Thanks for getting me in the loop there. So the breadth is bearish right now. We have the SPY signal still showing a buy signal. Market trend is still bullish. Market breadth is bearish, and all of every single sector is bearish. Go pick a sector, it's bearish, right? Let's drop in financials. I'm a financial guy. Jorn is here. Jorn's a financial guy too. Occasionally he flies planes in his spare time. That's bearish. Let's pick another stock. How about industrials? Jorn's an industrial guy. He does finance in his spare time. Like I switch that around. That's bearish. Everything's bearish. So like, I'm just going to sit on the sidelines for now. But in the meantime, I was really spending some time working on the portfolio data because I love me some data. And I found some really cool stuff. So these are all the trades. You know, we talked about this on Friday, like the year-to-date returns. So these are all the trades that I've put on this year, and you've put on this year if you've been following me, that have had the master key set up. Everything right here has the master key set up. 81 and almost 82% win rate. Absolutely unbelievable returns. Not a single losing month when everything is set up with the master key. And, you know, I talked last week about position sizing, and Mark and I went back several times on Friday and over the weekend. And Mark was basically like, Chris, where you're at right now, that 7% is pretty much where you need to be. Don't go any higher than that. He's like, the main reason here is because you're really limiting your opportunities, right? If you're going bigger, then you may only have 1, 2, 3, 4 potential trades on at a time. And you're really setting a lot of importance on those trades and not taking opportunities that could be coming your way. So he's like, listen, where you're at right now, that's as high as you really need to go. So I'm going to stick at 7%. Hey, Peter, good to see you. But there's some really, really, really good information to glean on this. So I wanted to go through this. So I went through all of the trades that were set up for the master key, and I added in the close reason, which you can follow along. Every single thing in here is right here in the 10-minute trading Discord channel here. I went through and I found all the heat map opens and all the heat map closes. And I was just looking at it, right? What exactly happened to these stocks? So there's not really all that many things, right? Only 9 different things have happened so far. A close below a half ATR is basically, you know what? It just didn't work out. It's a loss. 3 out of 4 were losers there. WPM is a perfect example, right? This is the one where we got in just a couple of weeks ago. It immediately sold off and it's gone down ever since then. Honestly, it wasn't a great pick. And occasionally that does happen. But then there's these close below half ATR from the rolls. Now, if you remember, these are the ones where they were doing great. Awesome. We rolled them up and then the stock pulled back. So let's take a couple looks at these, like AEM. I have to go back to here. right? So we got in on July 10th. July 10th, got out on July 18th. July 18th right here. You can see I left my notes on here, so I didn't change any of this. So this is where we got in. The next day, it looks like we rolled it up. And then it went up. Looks like, yeah, that's right. I couldn't roll it a second time because there wasn't liquidity there. I do remember that. And then it closed at the half ATR after our second rolling point. Like I say, I didn't get to roll it up because of liquidity, but that's where it would have been. So it closed right there. And as you can see, that was honestly a really good move because for the next, I don't know how many days that was. For the next 3 weeks, it traded sideways to down. Only after that point did it start with another big move. So we got out of that as much as we possibly could have. BAC was one I was actually really stoked to talk about. So if you remember BAC, I put this one on and I didn't know earnings were coming. I legit was not intending to trade earnings, 0%. But I believe it was Leo mentioned, hey, there's earnings. And I was like, wait, what? Totally missed that. We got ultra lucky. The trading gods smiled down upon us. But one thing I noticed here when I was looking at it today was I was like, wait a minute, there's an order block right there. But I didn't get out until the 18th. Why did that happen? I was like, huh, wait, didn't we just add the second order blocks, right? I've always had the 50 order blocks, but we recently were looking at this on the live stream together and looked at it and we're like, oh, wait a minute, the 28s actually have some legs to it. So now I have both the 50s and the 28 order blocks. Look at that. That 28 order block would have actually allowed me to get into this and day trade out of it because these are my rules. If a stock has an order block in that direction of the trend and moves into the order block, so imagine we're in here, that day of earnings, we're along for the ride, let's go for it, goes up into this order block here, we could have traded out of it if there were a 5-minute crossover. So closing at the end of the day, which still that would have been higher than where I got out. So I got out here versus here, right? That would have been 5.65% gain versus a 2.82% gain. So twice as much gain, honestly. So if the 5 period and 10 period don't cross on the 5-minute chart, just hold it and then close it at the end of the day. If they do cross, like this one shows here, that's the exit point. Most likely they would have crossed. I mean, you can see the tip of it, the wick of it right there. But still, that was cool. That was worth the time just on that one trade to see, oh, you know what? Adding that 28 order block really was worth doing. Let's look at NEM. This one here. What did I say was going on here? Close below half ATR from roll in July. I don't have my notes on this one. I must have deleted it at one point. But it looks like we got in. It went up 1 ATR. And then we closed it right as it came down. But also, that was a great time. Because it went sideways for another month or so before it took off again. So it's all about timing on this, right? And it's really cool. Let's go to another reason for exiting. Because one of these, I was like, holy moly, that was so good. Heat map stall, I think. Let's look at Jeff, J-E-F. All right, so this one here, we got out for a heat map stall, got in on May 8th, out on May 10th, just a couple days later. And, didn't hit the top on this one, but still got a nice little gain out of it. The next one, CLS. When was this one? July 15th. Oh, yeah. This is the one I wanted to show you. Look at this. Look at this. Got in July 15th, got out July 16th. You can find it in the Discord. Like it legit happened. Got in on the 15th, got out on the 16th of July. It started at G31. The next day was G31. In fact, let's go to that real quick. This one right here. Got in on G31. The next day was also G31. So that's my rule, is to get out when the heat map stalls. Okay. Look at this. We caught the top. We caught the top. We caught the actual top. And then it went down after that point. So I was so stoked to see the heat map stall right there and why that proved out, right? The heat map measures how fearful and greedy people are. When it, you know, look, it's one of the things we talk about, right? It measures how fearful and irrational people are and by how much, right? If we've determined that they are G31 greedy, and tomorrow they're still G31 greedy, they're not getting greedier. That's what I want to see. I always want to see, if I'm long a stock, people getting more greedy on the stock. Isn't that cool? Man, that makes me so happy. Let's go to the next one. FI. Now, we traded FI twice recently. We traded into FI and I immediately got back out because the heat map was actually stalled on the day that I got in. And you know what? That one actually took off, right? That would have been one. Had I kept it on, it would have been great. But then again, I had to follow my rules. It is what it is. But I did make some money earlier in the year on that. On August 20th, went from G32 to G36. Here, and just like a easy breezy trade. These are the kind of trades that I just love making, where you put it on, you don't have to do anything, you make money, you take it off, right? You hit a target, your heat map stalls, and you just get out. Let's go to Regions Financial. This was a losing trade. And this one here has so many order blocks on it. And it makes me wonder, did I miss that at the time? Because it's unlikely I would have traded into an order block that's it's 40 cents off. So I'm not sure. This was on the 50 order block. If I take off the 28, you can see it really was. Click the wrong button there. It was the 50 order block, so I would have seen that. I just don't know why I took that trade. To be very honest, I don't know why I took that trade. It was a small loser. Only 1% loser. G20, I'm sorry, August 26th, August 28th. So I got in on August 28th, got out, or August 26th, got out on August 28th. I mean, it was like 10 cents, 15 cents off from where I got in. And like I say, just a teensy weensy loser. In theory, if the heat map hadn't have stalled, I could have traded up into that order block again, like we talked about on Bank of America, and got out of it. But that's okay. And let's do DD. And listen, I hope this is interesting to you. I hope this is useful to you. I don't want it to be boring, but reviewing your portfolio is one of those important things to do. Okay. Looking at what you did, why you did it make sense? Could you have learned from it? Is incredibly important. And what better time to do that when you don't have any trades on, right? When you have time to spare, when you have nothing in the market to cloud your judgment, to just sit there and objectively look, does this make sense? Should I have changed up my rule some? Was there a different thing I should have looked at? Or maybe, one thing or another that we could learn from it for the next time we trade. So this is what pro traders do. That's why I'm doing it with you. Okay. So got in August 28th, got out immediately August 29th, was R4, and again R4 the next day on double D. And we almost nailed the top of that move too in just one single day. And then it came down, and then a bigger move came through a little bit more recently. Oh, hey, Tug. Tug says, very valuable information, continues to validate the strategy. Yeah, thanks, dude. So yeah, I love seeing this right here, where we almost nail, and occasionally we do nail the exact top before a little sell-off, before a bigger move happens. Like, that is super cool to me. So very, very stoked about that. All right, so let's move on. We've done heat map stall, close below the other things. Heat map target hit. This is the one where we actually make a bit more money, right? Average returns on these are huge. Average is 27% returns. Average. Except for the one loser. That makes it 24% returns on average. The first one was a loser on IFF. So let's go there. You can see my notes. I left my notes on there. I remember this one. So it had a big move post earnings, right? You can see the move down here leading into earnings, which is why I like to trade into earnings. I do. I really do, because you can have some really solid moves right up into earnings. So it was around 85, hit 88 on the day of earnings, and then rocketed up to 97. So it had basically a $10 move almost right there in those 3 days. And then it went sideways. And then it went sideways, popped up a minute, and then it went sideways for a while. Like, look at this. It went sideways for months, like legit months. Didn't really break out of that range until August. And we put on that trade in May, early May. So what happened with IFF? Heat map target was hit. Got in at G17. It went up to G27 during that time, but nothing really happened on the price. I mean, we're a couple days off from seeing a little bit of a move, but overall, just take the loss and move on. It was only a 4% loss. Who cares? JCI. This was my biggest trade of the year. I talked about this one on Friday. I mean, it was my biggest trade of the year, and I didn't even hit the top. Didn't even get close to the top. Biggest trade of the year, and it still had more than twice the move that I left off, unfortunately. So JCI, let's take a look at that one. It went from G2 to G13, right? Where's that at? That was my exit criteria. G2 fits right in here for a 10-point spread. So from G2 to G13, so it skipped over G12. It was in May, right there. That was that trade right there. Now, I was looking at this earlier, and I did make a note to myself that, you know what? I actually, where's my note? There it is. I was looking at this, and I was like, should we maybe amend instead of G13 to G15? And then I wrote on there, actually, I put it on Monday, but the signal came on Friday. The signal came the day before. So all I had to do was just enter on the day the signal came, and I would have made more money. What do I mean by that? The signal came on this candle on this Friday. And so that Monday I came in. I'm sure we could go watch the video together. That Monday I came in and said, hey, you know what? Let's take a look at today's picks. We don't see all that much. Let's include Friday's picks too. Would have made a couple extra bucks off that, right? Not a whole lot, but a little bit. 5.2% winner versus a 4.5% winner. So I could have made a little bit more out of that. So moral of the story is just take the trades on the day that they come, basically. Take the signals on the day that they come is what it told me. And then it got up. The highest point was on May 24th, which was G29. So basically holding it from G0 to G29, which is very unlikely. Like, it doesn't always move a 30-point swing like that. So just something that I thought was interesting. Let's go to the next one, NRG. Now, we traded NRG twice this year and have made good money on NRG. In fact, I believe, look at my dollars earned. CIEN, CIEN is the most I've made this year on, and NRG is the second most I've made this year on. I ain't mad about that. Ain't mad about that. Let's take a look at NRG. That's Alex's old company, right, Alex? NRG. Now let's take a look at both of these times we traded it. First time we traded it, May 14th. Got out on May 16th. And we only gave it a 5-point spread because it started at G27. Started at G27, so I only gave it a 5-point spread on the heat map. So it didn't do all that much. Got a little bit, 85 cents out of it. That was a decent move. What was my return on that one? A 12% return on a 1% stock return. Dude, that's why we trade options. Okay, that's why we do it. But the second time we traded it recently on September 25th was a much better story. And look at it continue to go. Continue to go. These outlier picks are awesome. Got in on the 25th when it's G14. Got out on October 1st at G24. One of those really easy moves. And a 29% gain on that. Thank you very much. Easy. Go to Walmart. Again, look at that. They don't all happen this way. Boy, do I wish they do. Where you put on a trade, every day is a green candle till you get your target, and then you're out, right? Oh man, if every trade I put on was like that, I would have no gray hairs for the rest of my life. But Walmart had this huge move after earnings. Look at this. It went from around 68 to $74. 6% move by the end of the day, 8% move at the highs. Just a huge move. And then we got the buy signal, right? So don't be scared of these gap ups, okay? Don't be scared, because in trend following, right? If it's above the trend, let it be above the trend and go as far as it can. You just don't have to be scared of those big gaps. You can see right there, that was that big gap I'm talking about. And then we got the buy signal 2 days later on August 19th, right here. So took that trade and watched it just stair step its way up. And then you can see it actually continued on. And this high right here came on September 16th. So it went from G13 on the heat map to G42, which is so deep in the greed, before it finally got that sell signal a couple days later. So pretty cool. Let's go to the next one here. Let's go to XLF. Now, ETFs generally don't move all that much. ETFs are more boring, right? ETFs are what you want to do when you're not so interested in a particular name, but you want to get exposure to the sector. XLF is the financial sector. So you're talking about like Bank of America, Wells Fargo, all the big name banks, JP Morgan Chase, all those, they fall into the XLF sector. So if you're not keen on trading a certain name or a certain stock, right, you can trade the whole sector by trading XLF. And because of that, it's more boring. It's way more boring. And generally the moves are a lot less dramatic, right? The moves are not as pronounced. However, XLF was a pretty dang good move right there, right? Almost all green candles all the way. We had one red candle there, but it was still up on the day. Got in when XLF was at G7. It went up to G17, so a 10-point swing on that. And the heat map target was hit. Went up for a couple days, and then it's gone sideways ever since then. Sideways. So we caught 80% of that move up right there. So very, very good. Let's switch gears a little bit. Heat map target hit and change to talk about heat map stall. Let's do market sell-off. You're going to like this. Holy moly. Mahesh has even completely changed his trading style, specifically around my market sell-off criteria. Hang on a second. So my market sell-off criteria, I didn't come up with it. It came from Steve Burns. Where's that? Here. No, here. Yeah, here. If it closes under the 20 EMA, wait to put on new trades until it closes above the 10 EMA again. Talk about the SPY. When the SPY closes under the black line, wait until it closes above the green line to even consider, above the blue line to even consider putting on new trades, right? So I marked a couple times on here when we have been following that, right? So July 18th, it was right below there. We got out that day. But by the end of the day, it had closed slightly above. But then you saw that big sell-off happen, and we were in cash. Thank you very much. Got back into trading here when everything else lined back up. Traded for about 2 weeks. The market was sideways, but we made money. Closed under the 20. Back to cash. Didn't do anything. So here, there's only 7 trading days. I don't know if you picked that up. 7 trading days. Yet we made money. And then, right now, back to cash for me. Now, I didn't close under the 20 this time. But I want to show you some of these results because they're awesome. So AFL got in July 15th. July 15th. Here. And then got out. It looks like we rolled. If we didn't roll, I set a new half ATR from where we should have rolled at right there. Yet there was a market sell-off on July 18th. What was that? Actually, give me 2 seconds here. I'm going to pop a second window open. And that should allow me to do this. Yes, okay. July 18th. Was this candle here. I was just talking about a minute ago, right? We closed everything because it right around the time of trading room, it had been below the 20 EMA, but it closed slightly above at the end of the day. But on that date, we closed a whole buttload. We closed more than that. Well, that's all I got on that one. But on September 3rd, which we'll look at in just a moment, we did that too. So we managed to take the profits out of that right there as it actually continued on up. And oh my gosh, look at this move. Look at that outlier move. Oh my gosh, look at that outlier move right there. Look at that outlier move right there. That is a crazy move. Got your buy signal July 15th. And then where was the actual sell signal? I don't know that. July 18th. The sell, like the sell signal came all the way to September 4th. So like literally the top candle was the sell signal and outlier. Oh my gosh, that's so funny. Look at that move. Is that not the coolest thing? Does that not make you excited about being an outlier right there? Yeah, that is sick. Okay. So anyway, we caught a couple bucks out of that, got out on the market sell-off. Let's go to the next one here. NC. Remember when we had NC and NFI at the same time? That was annoying. NC. Apparently I set on alert. Oh, that's right. That day, if you remember, it was on a tear. And early that morning, I even went in the Discord. I'll find it real quick. For those following the NC trade, we might need to day trade out of it. Looks like it might hit an order block. Look, it was moving up hard and fast, and that's where that order block bottom was, right there. So that's where that expired alert's from. But we managed to take a good few dollars out of it. And then on September 3rd, here, got out of it. And look at this. Got out of it on September 3rd, and then it sold off freaking hard, right? We took our money. We made, let's round it to 7% on that trade. And then goodbye. Down 7% on the stock. That's a brutal move. Down a $5 move on the stock. But we caught the high candle before that sell-off. How did we do that? By following the market sell-off rule, right? By following the market sell-off rule, we managed to keep a nice winner and avoid a huge loser. Isn't that cool? That's why my hash was like, whoa, Chris is onto something here. I know. Let's go to Infi. Now, we didn't make money on Infi, but that's okay. This one went sideways during that time. And then again, same reason of getting out. But then again, I mean, it was a 5% loss on the trade, whereas it literally went sideways and has been going sideways since that point. So that was a smart move on that. US Bank, USB. Look at this. Caught the rocket ship, but unfortunately didn't catch the top candle. Got the one out. I got out after that one, right? Rolled up, closed below the half ATR from the roll, and then all hell broke loose. Look at that. Look at that sell off there. So after we got out, it went down another 5.5%, 6%. So we took our gains. The market sell off happened. Got out on that day. And was gone. Now, I believe when I was looking at this, I made a note. I guess I didn't. Okay, I thought I did. Because I was thinking, how could I have gotten out on this candle versus that candle? So let's take a look at that together. Got in on the 28th. which is this candle, G10, 11, 14, 16. That was the candle we got out on. So it only went up by 4, which clearly I didn't want to limit it there. I just don't think that there was any, I don't think that we could have had a better exit, right? Yeah, of course, I'd like to say, because we have on others, that I call the top candle, but unfortunately it was the day after the top candle. But still, it was pretty dang sweet. Let's go change reasons here. Trading error, that was FI, we talked about that one. This one, we'll end on this one. Market and sector breadth sell-off on TMUS, which I still feel was like the absolute right move to make. TMUS has gone up a little bit. It's, what is it right now? 20 cents off where we got in. So we got really, really close to the highs. I'm not sure what's going to do next. Definitely is trending higher. But the market breadth and the sector breadth both turn negative. And because of that, I did add that as a rule here recently. So if we're in a trade and that sector turns negative, as well as the market turns negative on the sector, we're losing steam here, right? We're losing, imagine like a cheerleading pyramid, okay? Imagine your stock is at the top of the cheerleading pyramid. On the bottom, you got all the bases, all the big girls and all the guys, right? And they're holding everybody up, okay? And that's your market. Well, then a couple of people just bounce. They're like, you know what? I need to go get a hot dog. I'm thirsty. I need a Coke. And so your base of 10 now just turned into base of like 6, okay? That's the market selling off. That's the market selling off on this. That's your market starting to turn south. So your base just went from 10 people to 6 people. Now your second level, right? These are the girls that are strong enough to hold up the lightest ones, but not too heavy for the whole standard, right? So that would be like your sector, which this was the communications. And that was on this date here, September 27th. Prove me wrong. I was wrong. October 2nd. This is date here. Sorry. This date here. I thought we were crossing down. So those girls, those are, your base went from 10 girls to 6 girls and guys. And then your middle level, right? The 4 that left took 3 with them. Okay. So now your bottom base is 60% of what it was. Your middle base is 40% of what it was. And you've got a whole lot less people holding on to the one girl on top. That's very fragile up there. Okay. Super fragile, as you would like to say in the Christmas story. It's a very, very, what does he call it? Major award. It is a major award to have a leg lamp. It is a major award to stand on top of there and beat the trade. And if the market's falling, if the sector's falling, you're losing the strength underneath holding that up. So to me, that is a new exit signal. So that I did add onto here. So we covered quite a lot, right? Are there any trades that you want to take a look at that we put on this year that we could dissect maybe? Winner or loser, I'm here for you, always here for you. I want to make sure that every trade you trade with us has a positive outcome, whether it be we make money or whether it be we found something that can improve upon it for the next time, right? Not every trade is going to be a winner, as you've seen, but a lot of them can be by following the strategy. So let me know in the comments. If not today, maybe tomorrow, because I don't think we'll be trading the rest of this week. In fact, Wednesday, I have a personal issue. I'm going to be out, so there won't be a trading room on Wednesday. But these are what the things you need to do during downtimes, right? When you're not trading, how can I improve my trading? Where can I improve? What did I see that I could have improved upon? I added a new rule, right? We saw something on the indicator on BAC that we hadn't seen before. So these are the type of things, this is the time to make yourself better, study up, and be ready for the next time we get busy, right? because like, as you've seen, the times we're busy, it can be really small. The last time we were busy was 7 days, 7 trading days. From here to here, 6 trading days. 1, 2, 3, 4, 5, 6, 7. Wait, 1, 2, 3, 4, 5, 6, 7. Either I can't count or TrendSpider can't count. One of us can't count because this says 6 bars. I'm going to say they can't. It's probably this bar plus 6. Either way. So 7 trading days there. 10, let's call it 11 trading days there. And I didn't have market right there. So we go hard, we go fast, right? And in that time where we had 11 trading days, August 19th to September 3rd. Go to my real money portfolio real quick. Go to my real money portfolio. August 19th to September 3rd. That was where I went from basically flat on the year to up 12%. Basically flat on the year to up 12%. And the next time I traded, I went from up 12% to up 20%. 12% to up 20%. So there's nothing wrong with sitting and waiting when you can reliably put up big numbers, right? When you can see how this works. So again, I hope this wasn't too boring, but then again, these are the type of things you need to do in the off season. It's currently an off season. Don't push anything. Don't go against anything. Just continue to follow your plans. Okay. And thanks so much for being an outlier. We couldn't do this without you. And we want to pay you back every single day by helping you save time, make money, start winning with less risk together as a team. Now, don't forget, you can get the annual plan for just $3.29. That's only 90 cents a day. Highly would encourage you to do that if you don't already have it. And let us know if you need anything in the Discord, because as you know, the first rule of Outlier is to tell everybody about Outlier and to hit the like button. That way, YouTube tells everybody about Outlier too, and it's free. Thanks very much for being an Outlier. Thanks so much for coming to today's trading room. See you right back here tomorrow. Talk soon.